How to invest with great confidence for those looking to become more involved in the world of investing. It can be a daunting task. There are so many steps, strategies, and decisions that go into investing. And without proper guidance, it can be difficult to know where to start. However, if it is done correctly, investing can be an incredibly rewarding experience. This video will provide viewers with the essential information needed to invest with great confidence. How can I diversify resources while investing? One way to diversify your resources is to invest in different asset classes. This means spreading your investment across stocks, bonds, real estate, and other types of investments. By doing this, you reduce the risk of losing all your money in one type of investment. Another way to diversify your resources is to invest in different industries. For example, if you have invested heavily in the technology sector and it experiences a downturn, your portfolio will suffer. However, if you have also invested in healthcare or consumer goods sectors that are performing well during that period, then the overall impact on your portfolio will be less severe. Lastly, you can also diversify geographically by investing globally rather than just domestically. Investing internationally allows you to benefit from economic growth and opportunities outside of your home country while reducing risks associated with local factors such as political instability or natural disasters. Diversification is key when it comes to investing with confidence because it reduces risk and helps ensure that no single event or market trend can make or break a portfolio. How can I research the market with confidence? One effective way to research the market with confidence is by conducting a thorough market analysis. This involves examining various factors such as trends, consumer behavior, and competition. By studying these elements, investors can gain a better understanding of the market and make informed decisions on where to invest their money. Another helpful approach is to stay up to date with industry news and developments. This means regularly reading trade publications and financial reports and attending conferences or webinars related to your investment interests. The more you know about the market you are investing in, the more confident you will feel about your investment decisions. Lastly, it's essential to consult with experts in your field of interest. Seeking advice from financial advisors or other professionals who have experience investing in similar markets can help provide valuable insights that can give you greater confidence in your investment choices. Taking these steps will help ensure that you are making informed decisions based on reliable information rather than simply relying on guesswork or speculation when investing in markets. How to set realistic goals for investing. The key to investing with confidence is setting realistic goals that align with your financial situation and risk tolerance. Start by defining your investment objectives, such as building long-term wealth or generating income. Then, consider factors like your current income, expenses, debt obligations, and savings to determine how much you can realistically invest. Next, assess your risk tolerance by considering how comfortable you are with potential losses in the short term versus gains in the long term. This will influence the types of investments you choose and the allocation of your portfolio between higher risk and lower risk assets. Finally, be specific about what success looks like for each investment. Set target returns based on historical performance or industry benchmarks and establish a timeline for achieving those returns. By setting clear expectations for yourself and regularly reviewing your progress toward these goals, you can invest with greater confidence knowing that you have a plan in place. How do I create a budget while investing? Creating a budget while investing is crucial to managing your finances and maximizing your investment returns. First, you need to determine how much money you can afford to invest each month after accounting for all of your essential expenses like rent, bills, and groceries. This will help you identify a reasonable amount to allocate toward your investments. Next, consider the type of investments that align with your financial goals and risk tolerance. Determine the minimum investment amount required for each option and factor that into your budget plan. It's important to diversify your investment portfolio by spreading out funds across different types of assets such as stocks, bonds, or real estate. Finally, regularly monitor and adjust your budget based on market performance and changes in personal circumstances. Investing requires discipline and patience, but having a solid budget plan will help ensure long-term success in achieving financial stability and growth. How to track progress while I'm investing. One of the most important aspects of investing is tracking progress over time. This allows investors to evaluate their performance and make informed decisions about future investments. One way to track progress is by using a spreadsheet or financial software that can record investment data, such as purchase price, current value, and returns. This allows investors to easily monitor how their investments are performing against market benchmarks. Another key aspect of tracking progress is setting realistic goals and regularly reviewing them. This helps investors stay motivated and focused on achieving their objectives. It's important to remember that investing is a long-term strategy, so it's essential to track progress over extended periods of time rather than just focusing on short-term gains or losses. Finally, seeking professional advice can also be a valuable tool for tracking investment progress. Financial advisors can provide guidance on portfolio management strategies tailored to individual goals and risk tolerance levels. Building a personalized relationship with an advisor can help investors stay accountable for meeting their investment objectives while also providing peace of mind knowing they have an experienced professional in their corner. Conclusion. In conclusion, investing with great confidence requires a combination of research, knowledge, and strategy. It's important to conduct thorough research on potential investments and stay up to date on market trends. Additionally, having a solid understanding of financial concepts such as risk management and diversification can help build confidence in investment decisions. It's also crucial to have a well-defined investment strategy that aligns with personal goals and risk tolerance. This can include setting specific investment objectives, creating a diversified portfolio, and regularly reviewing and adjusting investments. Finally, it's essential to maintain patience and discipline when investing. The stock market can be volatile in the short term, but over time it has historically produced positive returns. By staying committed to long-term investment strategies and avoiding emotional reactions to market fluctuations, investors can build confidence in their ability to reach their financial goals. If you want to learn more in depth about this topic and how to invest confidently, just visit the link in the description below this video. Give us a thumbs up and subscribe to our channel for more informative videos like this one. Thanks for watching.